Hey guys, J. Darren Gross. I am in the outdoors. It's about 77 degrees in Lake Oswego, Oregon today, and it's just absolutely gorgeous. So I decided I'd come outside and talk to you instead of doing the inside thing. But I wanted to talk to you a little bit about underwriting your multifamily insurance and the cost per door. Everyone talks about cost per door, and it's almost like it's a rule, okay? And I would say that it's more of a guide. Think about a net operating expense. I think it's pretty common that 50% is a number that people use as a benchmark, but there's clearly operators out there that can operate in the low 40s and have a much higher cash flow than somebody that's operating in the 60s, and that may be the best that a certain property can operate at a 60% cash flow or expense ratio. Same is true with insurance. If you believe that it should cost you $250 a door, I think you may be mistaken. We've got properties, or we have a property down in Florida where I'm paying $600 a door for insurance, and I'm happy because it's the best deal I could find. Likewise, the other day I was working on a quote for a client, and we were coming in about $225 a door here in Oregon. So two different regions, two different costs. And that's the thing that I want you to understand, is that if you are investing in a particular region, you can establish some sort of a guide for when you're doing your numbers. But you have to get the numbers for the particular property and your circumstances when you're doing your insurance. If you're using the insurance cost for the seller's insurance, I think you're not understanding what they have, or actually you don't know what they have because you don't know what their circumstances are. They may have 100 properties and they may be getting some killer deal because of just the quantity of properties that they have insured. You don't know how long they've been with that company. It could be that the company that they're with will no longer insure properties like the one you're buying. Okay, it happens all the time. The company will grandfather in the properties that they currently have, but they will not accept any new properties like the one you're buying. So that could be something to be aware of. You don't know what the deductible is, what the buyer has. If you see the policy, obviously you're going to be able to see these things. But if you're just looking at a budget item, you're not going to know that. And you also don't know the coverage. When we bought a property down in Florida a couple years ago, the seller didn't even carry wind insurance. We're talking about Florida where there's hurricanes. Okay, my lender wouldn't let me do that. I had to have wind coverage. Okay, so and another thing is umbrellas. You never know if they have an umbrella unless you see the policy. Then you could determine that. And maybe you don't want an umbrella. Maybe you have to get your numbers as low as you can in order to get into the deal. Or maybe you do want an umbrella. But the point is, you have to get the quote that reflects you and the property, period. Okay. The other thing I want to make you aware of is insurance is regional. Okay. Now there are nationwide carriers, but their underwriting guidelines are going to be for a specific region, depending on what happens there. If you're in the Midwest and there's tornadoes and hail, that's a different exposure than down in the Southeast where there's hurricanes, catastrophic events, or even if you're up in the Northeast where there's big snow events and freezing pipes and even hurricanes up there. Or if you're out in the Northwest where I'm at, we've got rain. Okay, it's not a huge event, and consequently the rates that we pay out in Oregon are here, whereas the rates I pay in Florida are up here. So there's a huge difference, and you have to understand that it's regional. The other thing I think that's important to understand in this whole thing, when you're looking at a prospectus, remember who prepared the prospectus. The seller's broker prepared the prospectus, okay? And the seller's job, the selling broker's job is first to get the listing, okay? The other thing is to get as much money as they can for the seller, okay? And how they're going to do that is they're going to make the prospectus look as amazing so that you can assume that you're going to get these amazing returns, all right? I've seen it where they will not use the insurance cost of the seller because they think that they can get it for cheaper. So they'll put in an average what they think it should be. I've also seen it where it's a super low number that you can't get, and they'll use that because it improves the NOI and also improves the performance of the property. So again, you've got to get your insurance for you and the property you're buying. And finally, I want to make sure that you understand the benefit of working with an insurance agent or broker that specializes in multifamily. Underwriting is subjective, okay? Underwriters have discretion. They can apply credits if you can validate or give them a reason to do so, okay? If you're working with a generalist, somebody who doesn't normally work in multifamily, the chances are they're not going to know the questions that need to be answered so that the underwriter can feel comfortable and apply the maximum credits to your quote so you get the best deal. And consequently, you'll end up paying too much, okay? The job of an insurance agent is to gather the information, prepare it, and present it to the underwriter to make it easy for the underwriter to make a decision, to give you the best price you deserve. All right? Now, if you'd like some more information, you can click on the link below and you can receive my 10 steps to lower your multifamily insurance cost, okay? And beyond that, if you have any questions about your multifamily insurance, reach out and we can talk to see what you're doing and if it can be bettered. That's all I've got this week. I want to say thank you again for listening or watching if you're watching on YouTube. And if you haven't already, please consider subscribing. Also, you can like, comment, and share this. Any of those would be great. Remember, the more you know, the more you grow. Thanks again for tuning in to Commercial Real Estate Pro Network's CREPN Radio.